A major shock just rippled through the aviation world, and almost nobody saw it coming. China Southern Airlines, one of the largest carriers on the planet, has quietly decided to sell off its entire fleet of Boeing 787-8 Dreamliner aircraft. These are not old, worn-out planes at the end of their lives. They were once praised as cutting-edge machines built for the future. Yet now, they're being placed on the market as a single package, sending a clear signal that something deeper is going on. And the real reason behind this move is far more complex than it first appears. When the announcement first surfaced in late 2024, it stunned industry insiders. The global aviation sector was finally rebounding after years of disruption. Passenger demand was exploding, aircraft shortages were becoming severe, and manufacturers were struggling to keep up with deliveries. In that environment, airlines everywhere were fighting to add wide-body jets, not get rid of them. So when China Southern revealed plans to offload all 10 of its 787-8 South at once, many assumed it was a rumor. But by 2025, the airline made it official, listing the aircraft through a state exchange and confirming that no individual offers would be accepted. It was all or nothing. That alone raised eyebrows. Airlines typically sell aircraft gradually, spacing out retirements to avoid capacity gaps. China Southern did the opposite. Every jet, every spare engine, bundled together. Even the pricing fueled speculation. The starting valuation per aircraft came in far below what many expected for a modern wide-body. And then, just as suddenly, the process was paused amid uncertainty surrounding trade and tariffs. For a moment, it looked like the airline might reconsider. But that pause didn't last. Not long after, the sale was back on track, stronger than before. At that point, it became clear this wasn't hesitation. It was commitment. What made the decision even more confusing was the aircraft themselves. These Dreamliners were never problem children. When China Southern introduced the type in 2013, it was a milestone. The airline positioned the 787 as a symbol of modernization, efficiency, and global reach. The jets were deployed on long-haul routes and later became a core part of domestic and regional operations. By industry standards, an average age of just over a decade is still considered young. Many airlines around the world fly wide-body aircraft twice that age and still plan to keep them in service for years. Aircraft only disappear this early if there are serious safety concerns or chronic performance issues. That wasn't the case here. There were no widespread technical failures, no grounding events, no urgent regulatory pressure. On the surface, the planes were doing exactly what they were designed to do. Which begs the question, why walk away now? The answer starts with economics, but not the kind most passengers ever think about. While the 787-8 was marketed as highly efficient, efficiency alone doesn't guarantee profitability. Compared to competing aircraft, the -8 simply carries fewer passengers. That might sound minor, but in airline math, it's everything. Crew costs, fuel burn, maintenance schedules, and airport fees don't drop just because there are fewer seats on board. So every flight generates less revenue while costing nearly the same to operate. Over thousands of flights, that gap becomes massive. This is where comparisons start to hurt. Competing wide bodies can carry significantly more passengers while offering better payload flexibility. That means airlines can either pack more people on board or shift toward cargo when freight prices spike. The 787-8 lacks that flexibility. Even small differences in fuel burn, when multiplied across an airline the size of China Southern, add up to enormous costs over time. What looks efficient on paper begins to look restrictive in practice. But economics alone still don't tell the whole story. China Southern has been increasingly vocal about its long-term strategy, and that strategy revolves around scale. Bigger aircraft, higher capacity, stronger margins. Within that framework, the 787-8 no longer fits. The airline has made it clear that it prefers aircraft that can maximize revenue on high-demand routes while offering flexibility. When market conditions shift, that's why the larger Dreamliner variants remain in service, and why the smaller one is being shown the door. At the same time, the airline's broader fleet tells a revealing story. Over the past few years, China Southern has retired certain aircraft types, slowed new wide-body acquisitions, and streamlined operations. The goal isn't expansion at any cost, it's optimization. And when optimization becomes the priority, underperforming assets, no matter how modern, don't survive. There's also a regional reality at play. While international travel has rebounded strongly in parts of Europe and the Middle East, China's long-haul recovery has been slower. Wide-body aircraft designed for intercontinental routes often end up flying domestic or regional sectors instead. On those routes, excess range goes unused, and operating inefficiencies become impossible to ignore. Flying a long-haul optimized jet on shorter routes is like driving a supercar in city traffic. Impressive, but inefficient. This shift has forced Chinese carriers to rethink how they deploy their fleets. Rather than holding on to aircraft in hopes that international demand will eventually catch up, some are choosing to adapt now. And adaptation sometimes means cutting loose aircraft that no longer match the market reality. Naturally, this has fueled speculation beyond simple economics. Some observers believe the sale hints at a broader shift away from Boeing. While China Southern continues to operate other Boeing models, its future wide-body orders are dominated by Airbus. Whether this represents dissatisfaction, diversification, or something more strategic is still up for debate. Officially, no blame has been placed. Unofficially, the optics are hard to ignore. And then there's the domestic wildcard. China has made no secret of its ambition to build globally competitive aircraft. The long-term vision includes wide-body jets designed and produced at home. While nothing has been formally announced, rumors suggest state-owned carriers could eventually play a role in supporting those programs. Clearing space in the fleet, both operationally and financially, could make that transition easier down the line. For now, it remains speculation. But it's speculation many in the industry are watching closely. So if passenger airlines aren't rushing to grab these Dreamliners who might be interested, surprisingly, the answer may lie outside the passenger market entirely. Cargo operators are always searching for efficient platforms, and wide-body conversions have become increasingly attractive. Turning a passenger jet into a freighter can give it an entirely new purpose. With strong fuel efficiency and modern systems, the 787-8 could become a valuable asset in the cargo world, especially for operators looking to expand quickly without waiting years for new deliveries. There's also interest from fast-growing carriers facing delivery delays. Air India has been widely mentioned as a potential candidate. The aircraft configuration is similar to its existing fleet. The engines match, and integration would be relatively smooth. For an airline pushing aggressive expansion plans, acquiring available wide-bodies could be a shortcut to growth. Of course, that opportunity comes with risks, maintenance costs. Cabin upgrades and long-term viability all factor into the equation. In the end, China Southern's decision isn't about one aircraft model failing. It's about priorities changing. The aviation industry is evolving fast, and airlines can no longer afford sentimentality. Even aircraft that once symbolized the future can become liabilities if they don't align with strategy. What we're witnessing isn't the fall of the Dreamliner as a concept, but the narrowing of what airlines truly value: capacity, flexibility, and profitability above all else. And that's what makes this moment so telling. In an era of aircraft shortages and record demand, walking away from modern wide-bodies sends a powerful message. The question now isn't who will buy these jets, but who will adapt next, and the ripple effects of this move are already spreading far beyond a single airline. For aircraft manufacturers, this decision quietly reinforces an uncomfortable reality. Airlines are becoming far less forgiving. They're no longer willing to hold on to aircraft that don't perfectly match their evolving networks. Even a jet once marketed as revolutionary can be pushed aside if it fails to deliver the right balance of seats, range, and revenue. In that sense, this sale isn't just about China Southern, it's a snapshot of how ruthless modern fleet planning has become. For Boeing, the symbolism stings. The 787 program was meant to redefine long-haul travel, and in many ways it did. But the market has shifted. Airlines today want flexibility above all else. They want aircraft that can swing between passenger-heavy routes and cargo-rich sectors without sacrificing margins. They want higher maximum takeoff weights, stronger payload capability, and layouts that can scale with demand. And if an aircraft variant can't deliver that consistently, loyalty fades fast. This is why the timing matters so much. The global aviation industry is facing one of the worst aircraft shortages in decades. Delivery backlogs stretch for years. Leasing rates are climbing. Yet even in this environment, some aircraft struggle to find buyers. That contradiction tells you everything you need to know. Availability alone is no longer enough. Airlines want the right aircraft, not just any aircraft. What makes this moment even more striking is how quietly it unfolded. There was no dramatic press conference, no public criticism, just a listing, a confirmation, and a firm stance that the aircraft would be sold as a complete package. That silence speaks volumes. In an industry where statements are usually polished and diplomatic, choosing not to explain too much can be more revealing than any official quote. It also reflects a broader cultural shift within airline leadership. Decisions today are increasingly data-driven. Aircraft are no longer viewed as long-term symbols of identity. They're assets, and when an asset no longer performs at the level required, sentiment doesn't save it. Spreadsheets decide its fate. There's also an irony that's hard to ignore. At a time when many airlines are begging manufacturers for delivery slots, one of the world's largest carriers is voluntarily shrinking part of its wide-body fleet. That contradiction highlights how uneven the recovery really is. While some regions are overheating with demand, others are still recalibrating. And airlines that misjudge that balance risk burning cash fast. This is where China Southern's move starts to look less controversial and more calculated. Instead of betting on a slow international recovery, the airline chose certainty, cut future costs, reduce complexity, redirect capital, prepare for demand where it actually exists, not where it's expected to be someday. In volatile markets, that kind of realism can be the difference between stability and struggle. At the same time, this decision puts pressure on the secondary aircraft market. If these jets fail to attract strong buyers, it could reinforce a trend where mid-life wide-bodies lose value faster than anticipated. That would ripple through leasing companies, financiers, and even insurance models. On the other hand, if they're snapped up specially for cargo or rapid expansion, it could prove that adaptability, not age, is what truly defines an aircraft's worth. One thing is certain, this won't be the last fleet decision to raise eyebrows. Airlines everywhere are reassessing what right-sized really means. Some will downsize, others will consolidate. And a few will take bold steps that seem illogical at first, only to make perfect sense in hindsight. Years from now, this sale may be remembered as a turning point, not because 10 aircraft changed hands, but because it captured a mindset shift. A moment when airlines collectively stopped asking, "Is this plane modern?" and started asking, "Does this plane still earn its place?" That question is now haunting boardrooms across the industry. And as demand patterns continue to evolve, more aircraft, no matter how advanced, may find themselves facing the same silent judgment. Because in aviation, progress doesn't wait, and relevance is never permanent. And perhaps the most uncomfortable truth hidden in this story is that the Dreamliner's problem isn't that it failed, it's that the market outgrew it. When the 787-8 was first introduced, airlines were obsessed with range. Flying farther than ever before was the ultimate selling point. Ultra-long-haul routes were booming, fuel prices were volatile, and efficiency at cruise mattered more than anything else. But fast forward to today, and priorities have shifted. Capacity, flexibility, and turnaround economics now dominate decisions. Airlines are no longer chasing prestige routes just to say they fly them. They're chasing margins. And margins don't care about headlines or marketing slogans. They care about how many seats you can sell, how much cargo you can load, and how cheaply you can do both every single day. That's where smaller wide-bodies are starting to lose their shine. This shift explains why the 787-8, despite being technologically advanced, now feels slightly out of place. It sits in an awkward middle ground. Too large to behave like a high-frequency narrow-body, yet too small to fully capitalize on the economics of a true high-capacity wide-body. For airlines operating dense domestic or regional networks, that trade-off becomes increasingly hard to justify. There's also a psychological factor at play. Airlines hate complexity. Every additional aircraft subtype adds friction: more manuals, more simulators, more spare parts, more things that can go wrong. When executives look at a fleet and see a small group of aircraft that don't scale well, don't share economics with the rest, and don't align with future growth plans. The conclusion becomes almost inevitable. Cut it loose. What makes China Southern's move so fascinating is how decisively it acted. No gradual phase-out, no half measures, just a clean break. That kind of confidence suggests this decision wasn't made overnight. It was likely modeled, debated, and stress-tested long before it became public. By the time the announcement surfaced, the airline had already moved on mentally, and that raises a quiet but important question. How many other airlines are having the same internal conversations right now? How many fleets include aircraft that once made perfect sense but no longer do? In a market where capital is tight and competition is brutal, even small inefficiencies can tip the balance. What China Southern did publicly, others may be planning privately. This is especially relevant as manufacturers struggle to respond. Developing a new aircraft takes years, sometimes decades. But airline strategies can change in a fraction of that time. If enough carriers decide that certain segments no longer work, entire product lines can lose relevance faster than anyone expects. History has shown this before, and the industry has a short memory. That's why this sale feels less like an isolated event and more like a warning flare. It highlights the growing gap between what aircraft were designed for and what airlines actually need right now. It exposes how unforgiving the post-pandemic market has become. And it reminds everyone watching that in aviation, no aircraft, no matter how advanced, is ever guaranteed a permanent place in the sky. In the end, China Southern didn't just sell 10 airplanes. It sent a message. A message that the future belongs to aircraft that maximize revenue, minimize complexity, and adapt seamlessly to shifting demand. Everything else, even icons of modern aviation, is expendable. And that's the part that should really make the industry pause. What makes this moment even more striking is how quietly it unfolded. There was no dramatic press conference, no public criticism, just a listing, a confirmation, and a firm stance that the aircraft would be sold as a complete package. That silence speaks volumes. In an industry where statements are usually polished and diplomatic, choosing not to explain too much can be more revealing than any official quote. It also reflects a broader cultural shift within airline leadership. Decisions today are increasingly data-driven. Aircraft are no longer viewed as long-term symbols of identity. They're assets, and when an asset no longer performs at the level required, sentiment doesn't save it. Spreadsheets decide its fate. There's also an irony that's hard to ignore. At a time when many airlines are begging manufacturers for delivery slots, one of the world's largest carriers is voluntarily shrinking part of its wide-body fleet. That contradiction highlights how uneven the recovery really is. While some regions are overheating with demand, others are still recalibrating. And airlines that misjudge that balance risk burning cash fast. This is where China Southern's move starts to look less controversial and more calculated. Instead of betting on a slow international recovery, the airline chose certainty. Cut future costs, reduce complexity, redirect capital, prepare for demand where it actually exists, not where it's expected to be someday. In volatile markets, that kind of realism can be the difference between stability and struggle. At the same time, this decision puts pressure on the secondary aircraft market. If these jets fail to attract strong buyers, it could reinforce a trend where midlife widebodies lose value faster than anticipated. That would ripple through leasing companies, financiers, and even insurance models. On the other hand, if they're snapped up specially for cargo or rapid expansion, it could prove that adaptability, not age, is what truly defines an aircraft's worth. One thing is certain. This won't be the last fleet decision to raise eyebrows. Airlines everywhere are reassessing what right-sized really means. Some will downsize, others will consolidate. And a few will take bold steps that seem illogical at first, only to make perfect sense in hindsight. Years from now, this sale may be remembered as a turning point, not because 10 aircraft changed hands, but because it captured a mindset shift. A moment when airlines collectively stopped asking, "Is this plane modern?" and started asking, "Does this plane still earn its place?" That question is now haunting boardrooms across the industry. And as demand patterns continue to evolve, more aircraft, no matter how advanced, may find themselves facing the same silent judgment. Because in aviation, progress doesn't wait.